Folks, if you take nothing else away from this video, just understand this stock market is beyond screwed up. I mean, I'm talking about not just screwed up on a for what it normally is basis. I'm talking about this is screwed up on like a multi-decade basis, okay? This market is freaking messed up, okay? I'm about to take you through a bunch of charts and show you a bunch of things that I don't usually show you guys on this channel that's going to blow your mind. And by the end of this video, you're going to understand that this market is essentially prepping for one of two scenarios to happen, essentially. And if the market gets this wrong, oh boy, look out. That's all I have to say about that, okay? Alrighty, guys, so let's get into this. Hope you enjoy this. As always, just spent the last hour or two trying to put this together for you guys. Much love as always. Hope you're subscribed to the channel. It's absolutely free to do so. And also sign up for our daily email newsletter to keep you up to date with everything going on in the business community, stock community, stuff like that, okay? That'll be a pinned comment down there. So what we're looking at first off here is we're looking at S&P 500, well, also 500, 400, and 600 forward Ps, okay? Now, what's very interesting is the S&P 500, that's large caps, okay? 400 is considered mids, 600 is considered smalls, all right? So remember all those I just gave you there, okay? Large, mid, small, okay? So the greens are smalls, blues are mids, reds are the large caps, okay? Now, what is a normal market? Is the large are going to almost always trade cheaper as far as forward P goes than the mids and than the smalls, okay? And so that's why pretty much throughout history, you see the red line is below the blue or green line. This goes all the way back to 2004, okay? All the way back to 2004. I was a freshman in high school in 2004, so that was a bit of time ago, okay? And you see consistently the red is below the other two. Red is below the other two, right? Red is below the other two. The only time the red barely went a little above the other two was just before the Rona crash, okay? And that's the only time. Other than that, it's always either in line or usually below. And there's usually quite a divergence between the mids and the smalls. They're almost always trading more expensive, which is normal. Small cap stocks should trade more expensive over time than mid caps. And mid caps should trade more expensive than large caps. That's the way it should be in a normal market, okay? But right now we are in the furthest thing from normal market. Look at that, okay? Look at this right here. Not only are large trading significantly above mids and smalls, but it's the largest divergence we've ever seen between any of them. Even if you go back to around 2010, 2011, when there was a major divergence here. And remember, that's when mids and smalls were much above large, which is a normal market, right? Even that difference there is a small difference compared to this difference we have right now in this current market between the large caps and the smalls. I mean, we're talking about, roughly five, point difference. Like, that's ridiculous. That's ridiculous. Okay. This is, if you just want to look at one thing to say, man, this market is freaking messed up right now, this is that one thing. And this is just the tip of the iceberg. That's the best part. This is just the tip of the iceberg here, baby. Okay. Wow. All right. Now, what you're looking at here is forward Ps for the Russell 2000. All right. And what we're going to find is the Russell 2000 in general. That's the red line there. We're trading, much cheaper pretty much than we've been trading in quite some time. You pretty much have to go back to about 2012 to really get to time periods where you were trading cheaper on the Russell. Now, keep in mind, with the economy opening back up, with the world getting back to normal and all these sorts of things, you would think there should be a lot of excitement in especially a lot of the smaller companies, because a lot of the smaller companies were the ones that were hurt the worst in Rona. Let's be quite honest. How much was Apple really hurt? If anything, Apple was helped by Rona. How much was Facebook hurt during Rona? If anything, they were helped. Everybody's got to be at home, okay? They're going to be on Facebook, Instagram, WhatsApp, and all the other properties they own, right? Was Google really hurt? No, if everybody's at home, shoot, they're going to probably watch more YouTube than ever. They're probably going to be on Google, all those sorts of things, right? So was Google really hurt? Not really. Was Microsoft hurt? No. Was Amazon hurt? No. If anything, they were helped. Online shopping, right? So a lot of the biggest of the big companies actually weren't hurt by Rona. If anything, they were actually, you can make an argument that they were helped, right? So meanwhile, we have this reopening that's about to happen. I'm talking a real reopening, right? Like last year's reopening, they called it. It was lame. It's like mask mandates were still on almost everywhere. You still had all these restrictions and things like that. This spring, all that stuff's going to be going away. All that stuff, all these restrictions, all that stuff's going away, okay? It's already started to go away, but it's really going to start to go away over the next 2 to 3 months, okay? As that stuff goes away, a lot of these smaller cap companies are going to see their businesses get to much, much healthier places than they've been in the past, right? But in this sort of market, it's not valuing that at all right now, which is incredible, right? You want to see something crazy? Look at this. I've never shown this in the history of my YouTube channels. What you're looking at is forward earnings ratios. Once again, these are all forward looking over the next 12 months. And this is S&P 500 large caps versus the Russell, okay? The Russell 1000, that is. And essentially what this shows you is that the large caps are trading much, like very, very rich compared to the smaller cap companies, okay? And what you're going to find is over the last 15 plus years, you only get a few time periods where things have traded this out of whack, essentially, okay? You got 4 time periods in the last 15 plus years. One is here during the Great Recession, all right? One is right here around 2010, roughly, right there, okay? One is right here, right around 2015, for a very short amount of time there. One was during the Rona crash, right there. And one is now, okay? 4 times in the last 15 plus years you've ever seen this situation happen, okay? And it doesn't happen for very long, but it does happen every once in a while. And that's just, right now, the market has flooded, essentially, out of anything mids and smalls and has flooded into anything that is a larger cap, right? And it's extraordinary, the divergence we're really seeing. And it's kind of like the stock market is in a place right now of the haves and have-nots. And it's like, are you a big giant corporation? Good. Are you anything other than like $1 trillion market cap? Bad. Down to the floor for you, okay? Now, what you're looking at here, this is forward Ps for mid caps, Russell mid caps, S&P 400 mid caps. And once again, what you're seeing here essentially is the biggest divergence we've ever seen. Look at how these two follow each other around consistently throughout. This goes all the way back to, 2000-ish, okay? And look at this. They are right next to each other constantly. A little divergence there. Constantly, these two are together. They just move together. They dance together, right? Little divergence there, then back together. Little divergence there, then back together. And then now you got this massive divergence between these two, which is just why this market is so messed up right now, because none of this makes any sense. To have this sort of divergence between these two is not normal. We're in the furthest thing from normal right now in the stock market. Let's be very clear about this. When you see things like this happening, come on, man. You got to be flipping my flapjacks. This is a joke. This shouldn't be like this. This shouldn't be like this, okay? Next thing we're looking at here, this I do show from time to time, S&P 600 small caps. This goes all the way back to 1999. We are trading the cheapest. There's only 3 time periods really where we've traded cheaper, okay? One was in the Rona crash, all right? Next was in around 2011, 2012-ish, double dip recession fear time, right there, okay? And the other was in the Great Recession, and that's it. That is it. That's the only time periods in the last 20 plus years, right, that we have seen small caps trade this cheap or cheaper than this. Let's call it cheaper than this, okay? 3 times in 20 plus years, all right? Right now, the market wants no piece of a lot of stocks, let's be honest, even a lot of large caps. But the market wants no piece of anything small cap related. Anything mid cap related, like, I don't want that right now, okay? No way do I want a piece of that. You want to see something messed up. Check this out. Alibaba is the biggest big giant out of China. Dominant company, amazing business model, incredible numbers. They've always reported, right? This stock here today is cheaper than it was when it went IPO. In 2014, you got to be kidding me, okay? In 2014, all this company has done is tear it up over the past 8 years. I mean, absolutely obliterate numbers after numbers after numbers, report amazing growth rates. The company, this is the best part, the company didn't even go, when the company went public, it didn't even go public at like some crazy valuations like, oh my gosh, I can't believe it's going those ratios, are you kidding me? No, I remember looking into it and I was like, yeah, it's a pretty fair IPO actually in a time period when there weren't a lot of very fair IPOs. I thought Baba was actually pretty fairly priced. But obviously it didn't matter. Didn't matter because what is the Alibaba? It's a Chinese company. And there's no trust in any Chinese stocks. No trust at all. And so the market is so screwed up, right? And I told you we're in such a screwed up market right now. Not just based upon ratios, but based upon there are people, we're letting everybody invest in Chinese stocks still, right? But then they're talking about still potentially delisting these companies, right? And so there's all this talk about delisting. There's all these problems between China and the US, right? And it's like, what's going on here? What's gonna go on with Baba? Is this baby just going to go for eternity into the bottom of the pit? Or is there any hope here? Because what I know about Alibaba's is underlying business is amazing. That's just what I've consistently seen from this company ever since they went public. Amazing company. Doing amazing things. But the market doesn't care about that. And, somebody like myself, why am I not stepping in to buy Baba tomorrow? It's a Chinese stock and it could get delisted, right? That's why I'm not buying this one. And I love the management team over there. I think they, it's as good as you'll get for a foreign company. I think the business model is amazing. I think, their cloud business specifically is just going to continue to grow. But can I buy Baba tomorrow? I can't. I don't know if this stock will be delisted in a year from now or 2 years from now. And so, during that time period, who knows? Maybe the stock price just continues to go down and then it's $60 and then it's $50 and then it's $40 and $30. And it's like, oh, now we're delisting it. And it's like, okay, what did I get my $30 a share at that point? So that's the insane thing here, right? And for a company like Baba, because they're a Chinese corporation, are they going to all of a sudden start paying out dividends to shareholders? That would be a smart decision, but I don't know if the People's Republic of China would allow it. I don't know if they would allow it. If all of a sudden Baba was like, yeah, we're going to pay out 50% of our earnings to shareholders in the form of dividends. I don't even know if the PRC would allow it, to be quite honest. And so when you talk about things like that, right, that's why people don't want to buy this stock, despite it looking like a steal deal, which if you look on valuation metrics, the company's trading at a 1.9 price to sales ratio. Get out of here, man. $200 billion market cap's a joke. PE ratio of 25 with a company like with this business model. My gosh, okay. 1.62 price to book. It's silly. It's silly, but can we buy it? Nope, we can't buy it because it's a Chinese stock. And that's how screwed up a market we're in. Now, I got some good news. I do have some good news. Oil is suddenly dropping like a rock, okay? And I don't know if that's going to continue on, but that is great news because oil peaked out basically a few days ago. Oil peaked out at about $130 a barrel just a few days ago. And since then, we have been kind of on a little, let's call it, okay, the Titanic, it's going down. Now, there's a lot of people that still are believers in oil as we go throughout this year and as we go into the summer and things like that. What I will say about oil is with oil prices going up and gas prices skyrocketing, right? That adds to inflation numbers. Now, we're going to get political, okay? Midterm elections are coming up. Now, I hate politics as much as probably anybody. I don't get into it. I pay attention the least amount I possibly can to politics. But I keep aware enough of what's going on. And I do know midterms are coming in the fall, okay? And from everything I'm hearing, Republicans are looking like they're going to, it's going to be a smoke show, okay? Looks like they're going to tear it up, all right? So, if the Democrats want any chance in those midterms, they've got to get inflation down. Because the fact is, especially the middle class, which is the most of the people that go out there and vote, they're getting diced right now. Rents are going up, gas prices are going up, food's going up, everything's going up, energy's going up. And so I don't know if the Dems even have a chance unless they really get gas prices down and they get all the other inflation numbers down. But at least oil is something they can maybe potentially control if they really, get people, get everybody that could potentially drill for oil really going on it. The issue is here, and here's where things get really crazy, okay? Let me explain this, all right? Guess what? Oil companies, they don't really like those people very much, okay? Those two sides don't really get along. The Dems and oil, they don't really mix too well, okay? Kind of like oil and water. They don't mix too well. And so here we are in this situation where there could be a lot of oil executives that see the administration and Dems needing them right now, right, to try to get oil, like drill, baby, get the oil, get the wells up and running because we need to get this price down because people are getting slashed up by inflation right now, and we need to get these inflation numbers down to somewhat of a normal level by the time elections come, or we stand no chance, right? And I don't know how many of those oil executives are really like, yeah, let's get drilling so we can get those prices down, because they don't mix anyways. They would probably love it if all those people were out of office, to be quite honest, right? That's where it's very important. And I like to not get tied in as much, but I always think about these things as kind of like a chess game. And it's no fun if you need favors from enemies. No bueno, man. No bueno. That's all I have to say about that. And this has gotten political. My dad sent me this picture. It was interesting. I guess these stickers are getting really popular. People are putting them on pumps all over the place. Oh, gosh. Okay, and look at, they must have tore this one up. Oh, boy. It's going to become a political game. Woo! And it's going to be messy, okay? Now, PayPal. Here's back to the screwed up market we're in right now. PayPal, 3 years ago today, that's where the stock was. Think about the tremendous progress PayPal, Venmo, all their services, their revenue, profitability, employees, everything. Think about all the progress this company's made in the last 3 years, completely wiped out when it comes to their stock price. Just, we don't care about all you did over the past 3 years. We don't even care about it. We don't want your stock. That's insane to think about. 3 years ago today, the stock price was the same as it is today, man. Crazy. And, there's nothing the company can do in the short term to really reverse that, right? I mean, over time, obviously, as the quarters tick on and the years tick on, they will come out of that and their stock price will prosper as long as their business executes. But right now, it's not like the company can magically announce something, maybe a stock split. But there's not like they can imagine their stock has pretty much gotten split, to be quite fair. Oh, boy, okay, that's rough. But, there's nothing really they can do. Now, I recognize this silliness, and I'm a buyer of this stock right now. It's a steal deal of a stock, and it's completely been mispriced by this market, and it's ridiculous, and it doesn't make any dang sense, and the market's screwed up, but that's just part of the screwed up market we're in right now. Meta, FB, this stock is up 5% since March of 2014. 4 years ago. 4 years ago. Are you kidding me? All the progress that company's made, everything they've been able to accomplish with their business model. And this thing is, the stock was cheap in March of 2018. It wasn't like this was such a crazy valuation for Meta. I can't believe it's at this price to sales ratio and this PE ratio. No, it wasn't like that at all. And the stock is 5% up since 4 years ago. Oh my gosh, man. That's how much this market is like, we don't care. We don't care about the progress you made. We don't care about your future. We don't care about your 3-year plan. We don't care about your 5-year plan. And we don't care what you did over the last 4 years. It doesn't matter to us. We don't want your stock. That's the market we're in right now. Teladoc was higher. Think about this for a moment. Virtual healthcare company that has business exploded to insane levels over the past 2 years because of Rona, right? And that's not going to slow down. Like at the end of the day, when it comes to virtual healthcare, that's just going to become a bigger and bigger market over the coming years. I think everybody with a brain knows that, okay? But Teladoc was higher 3 years ago. And I understand there's been dilution in the shares outstanding over time. Sure. But still, at the end of the day, this stock price was lower 3 flipping flapjack years ago. Incredible, okay? Look, Dropbox, for instance. This company went public in 2018. The year before they went public, they were doing $1.1 billion of revenue. 2018, they would do almost $1.4 billion. 2019, they did $1.6 billion. 2020, they did $1.9 billion. In 2021, the year they just came off of, they did $2.15 billion of revenue. Now, this company did not go crazy, public at some crazy valuation that it's like, oh my gosh, it wasn't some hyped stock. It was none of that, okay? And so business has made tremendous progress. If you look at their bottom line, tremendous progress, their margins, everything is dramatically better than when they went public, okay? And how has their stock price been treated over that time? Well, this stock price is lower today than when they went public in 2018. Despite all that tremendous progress, all the great numbers, this stock price is cheaper literally today and significantly cheaper than it was when they went public. And this was not a stock that was a hype stock that went public at some crazy valuation, okay? You know, that's just insanity, just pure insanity. And that's the market we're in right now, that it's just, you know, doing whatever the heck it wants to do, okay? Travel stocks. Let's talk about travel stocks for a moment, right? You know, you would think with the world getting back to normal, with all the travel opening back up for real starting this spring, right? You would think travel stocks would be doing amazing going into that cycle, right? Because it's like an understood, like, oh, you know, a lot of people haven't traveled really in a real way for 2 years, especially not the group that really spends a lot of their money on traveling, which is a lot of the retirees, because they got the time to do it, right? The working class, you know, you only have so much time you can, you know, go and travel. For instance, you know, I remember in my dad's pool business, they had a customer essentially, and, you know, him and his wife, they were retired, and they just always like, you know, going on cruises all the time, like, you know, at least 4 to 6 times a year, they'd be going on cruises. And some of these cruises were like 2 weeks, 1 month long type cruises, like, you know, insane cruises. And, you know, that's all going to start to get back to normal this spring, right? But are the travel stocks doing amazing going into that excitement? No. And that's exactly the opposite of what you think. You think, man, travel's going to open back up for real. All the travel related stocks going to have to do amazing going into that, right? It's going to have to price in. And it's like, no, UAL's at, you know, insane lows, insane 52-week lows. AAL, same exact thing. All these stocks are at or somewhat near 52-week lows right now. 52-week lows, all these guys. And that's just not what you would think would be the situation when you have the world truly about to open back up. But that's the way it is right now, right? And so, you know, you say some of these could be, you know, their fuel costs could go up or something like that, but some of these aren't even dependent upon that. For Wynn, it doesn't matter if fuel costs are up. You know, Wynn's core customer probably has $1 million in the bank. They don't care if the gas price is $4 or $5 or $3 or $6. It means nothing to them, right? Some of these other companies might be a little different situation, right? So, but that's the market we're in right now, right? So when I look at the market right now, essentially what the market is trying to tell us, right? It's the market's belief we're going to have a recession. And I think it's the market's belief that there's going to be a good size recession, right? Now, I went on record a few months ago. I did a whole video, said, you know, I was preparing for a recession. Not that I knew it was going to come, just in case. But the interesting thing is, I haven't seen anything in the real world that makes me say, oh, yeah, man, maybe there is going to be a recession. When I go online and when I watch CNBC and other things like that, I start to think, oh, man, yeah, maybe there's going to be a recession. And then I go to the real world and I'm like, none of the activity I see out here is showing me a recession at all, even remotely. And so that's where I'm kind of at this conflicting point. But what I do know is the market's kind of pricing in that type of scenario. And if that doesn't happen, we are going to be on a tear in the market. And I mean an absolute tear. And I mean, we're going to see stock prices, some of these stocks fly up 2x, 3x in like snap of fingers. The big question is if that happens. And so time just has to kind of play out here, and we'll see if the market's right about the recession fears. And if it's not, get ready to see some flying things, because this market is screwed up. And the market can only stay screwed up for so long. I don't care if you're talking about screwed up on the upside, screwed up on the downside. The market can only stay in a screwed up state for so long, and then it comes back to what's called normal. And all these metrics and all these things you're seeing, all those messed up charts I just showed you, they end up coming back to normal. And the world goes on, and stocks prosper. So anyways, guys, hope you enjoyed this as always. I spent a little time prepping this. I appreciate you guys joining me for this video here today. Don't forget to sign up for our daily email newsletter. That'll be pinned comment down there. That's absolutely amazing. It's absolutely free. Subscribe to the channel. Much love and have a great day.